Did you know that nearly 60 million Americans work in the gig economy? But many are shocked to discover that their take-home pay is significantly lower than expected due to hidden tax bills, with some even owing thousands of dollars to the IRS at tax time. Gig work is often presented as a lucrative opportunity, but the reality is more complex. Studies suggest that a significant percentage of gig workers earn less than $1,000 per month. Companies like Uber and Lyft often advertise high earning potential, but actual earnings are typically lower, with median earnings ranging from $8 to $15 per hour. This disparity highlights the importance of understanding the true economics of gig work. Gig workers are considered self-employed and must pay self-employment tax, which can significantly reduce their take-home pay. The self-employment tax rate is 15.3% for Social Security and Medicare, consisting of 12.4% for Social Security and 2.9% for Medicare. For example, if a gig worker earns $1,000 per week, they may owe around 15.3% of their earnings in self-employment tax, leaving them with a lower take-home pay. Gig workers are required to make quarterly estimated tax payments to the IRS, which can be a significant burden. The IRS requires estimated tax payments to be made on a quarterly basis, with due dates on April 15th, June 15th, September 15th, and January 15th of the following year. It's essential to plan for these payments to avoid penalties. Failure to make these payments can result in penalties and interest, which can further reduce take-home pay. The IRS may charge penalties and interest on the unpaid amount, highlighting the importance of timely payments. But here's the part nobody talks about. The tax implications of gig work can be even more complicated when you factor in expenses like mileage and equipment. This is where meticulous record-keeping becomes crucial for maximizing tax savings. Gig workers can deduct mileage expenses on their tax return, but the rules can be complex. The standard mileage rate for business use of a car is subject to change annually, so it's essential to stay updated on the current rate. Gig workers must keep accurate records of their business miles, including dates, locations, and purposes of trips, to claim the deduction. This level of detail is necessary for ensuring compliance with tax regulations. The mileage deduction can be a significant tax savings opportunity for gig workers, but it requires meticulous record-keeping and attention to detail. By understanding the rules and keeping accurate records, gig workers can minimize their tax liability. When you factor in self-employment tax, quarterly estimated payments, and expenses, the real take-home pay for gig workers can be significantly lower than expected. Studies suggest that gig workers typically take home around 60 to 70% of their gross earnings, highlighting the need for careful financial planning. For example, if a gig worker earns $1,000 per week, their take-home pay might be around $600 to $700 after accounting for self-employment tax, estimated tax payments, and expenses. This disparity underscores the importance of understanding the true economics of gig work. The hidden tax bills and expenses associated with gig work can have a significant impact on workers' financial stability and security. It's crucial for gig workers to be aware of these factors to make informed decisions about their finances. The $1,000 per week headline number, often advertised by gig economy companies, can be misleading, and workers should be aware of the potential tax implications. By understanding the true economics of gig work, workers can better plan for their financial future. A real-life example of a gig worker who earned $1,000 per week but owed a significant amount in self-employment tax and estimated tax payments at the end of the year. This example highlights the importance of planning for tax obligations. The importance of understanding the tax implications of gig work and planning accordingly to avoid unexpected tax bills. By being aware of the potential tax implications and taking steps to plan for them, Gig workers can minimize their tax liability and maximize their take-home pay, ultimately achieving greater financial stability. To navigate the complexities of gig work taxation, it's essential to understand your self-employment tax obligations, make quarterly estimated tax payments, and keep accurate records of your expenses, including mileage and equipment costs. By taking these steps, gig workers can better manage their finances and avoid unexpected tax bills. If this changed how you think about money, subscribe. There's a new breakdown every week. By staying informed about personal finance and taxation, you can make more informed decisions about your financial future.